Most people, what they do is they'll buy the land, get the financing on the land, then find a developer, build the project. It's a lot more time consuming and sometimes complicated to structure a deal like that. I don't do it like that. I like the turnkey method. Basically, the developer sells me three things. They're selling me in the transaction the land, the building fully built, ready to move in, and already rented with the tenants. If I do that and I'm buying three things, it's saving me three. I'm saving time, I'm saving money, and I'm saving headaches.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today, with a little bit of a broken voice, so bear with me. Hello, today we have Alex Rossi, who is back on the show, who was already here last fall and who's had quite a few developments, achievements on the real estate space. So, hey, Alex, how are you doing?
Hey, I'm well. What's new and exciting with you other than that voice? I guess maybe you've been screaming and shouting so much closing real estate that you've lost your voice over the last couple of weeks or whatnot.
Yeah, well, it was just actually since yesterday. I've just been talking a lot, I guess, and this morning woke up with a little bit of a broken voice, but it'll come back. So we're here to talk about you. And before we do that, I just want to remind everyone who's been listening, thank you so much for your support. Please subscribe to the show, share it with a friend who you think could benefit from it, as the goal here is to help and educate as many people on how to start investing in real estate or scale and grow their portfolio. So there we go. So Alex, talking about growing and scaling your portfolio, like what's new with you since last fall?
Oh, a lot of things. With the new program, with the 95% loan to value CMHC program, we're really busy getting the right buildings for investors that qualify. Challenges, rising rates have made it, a lot more difficult to identify and buy those buildings. But the good news is with the new program, 5% down payment, 50-year amortization, 1.1 debt service coverage, we're in a great place, and I'm busier than ever before finding my investors buildings. I closed on a 26 in Gatineau, my favorite market still to this date. We're seeing tremendous amount of upside in that market. We've looked at probably one of the highest multifamily rates of return from, not only the amount of revenue you get per door vis-a-vis the cost per door. And we're just really having low vacancy, great, potential as Ottawa's finding the market too expensive. We're getting a lot of tenants moving to the Gatineau market. Yeah. So on my plate, things are well since we chatted last October. I mean, deals are coming, taking advantage of the new program, and I'm here to raise capital. I have a lot in the pipeline, so I'm sure we could all get excited about that.
For sure. And let's, for those who didn't listen to the episode back last fall, can you kind of like remind us on your 26 units in Gatineau? It was a new build. Did you buy it on plans, or how far was it when you,
so when back in October, you had interviewed me about, my expertise, my forte and everything pre-construction. And I reminded you, we spoke about how my claim to the fame was in Griffintown. I had bought a few condos. I refinanced them. I bought more, and my babies were multiplying. I started with one, and then it became two, and it became four. And then I pivoted that into the multifamily in Gatineau, did a 6, then did a 26. Now I just did another 26 with another partner. So the pre-construction game is interesting. My babies are multiplying. I love to multiply my babies as I refi and buy more. That's what we discussed in October. Since then, I've closed on the 26. It made a 7-figure return on investment. So that uptick was 7-figure, and I'm really happy. I'm really fortunate, more than I ever have been, because I've added, a 7-figure return to my net worth. And, if I can do it so well for myself, I have a proven track record now. People are happy about what I do. I really want to take it to another level and make other people wealthy.
Yeah, and for other people to be able to join you in that adventure. And so, that's kind of like the past and the present. What is it that you are looking for now in terms of deals? Like, are you still sticking to the Gatineau market, or are you looking elsewhere in the province?
That's an excellent question. I still have Gatineau on the radar. It is still my top market. It is still my core market. I will continue to have success for myself and my investors in that market. But as you know, prices are creeping up in terms of just the cost alone of construction. We've seen it wood, windows, labor, shortages, supply
Everything.
chain issues. Everything has, gone up so much in price, land as well. And when you calculate the price of land divided per door, when the land goes up, well, if your cost per door is 20 to 30 grand more now and Gatineau than it was 2, 3 years ago, I am actively looking in two other key markets that I wanted to share with you today. Axel, I have Granby, which is an
Yeah.
incredibly strong market because it has the lowest vacancy in the province of Quebec at, I think it's 0.9%. So
Wow.
virtually no vacancy there, which is very attractive to investors as well as developers. That is my second market that I have on the radar. And I have a very, very tertiary, far out market, rural market that I like a lot because the cost is very low. It's in Lac Mégantic,
Yeah.
on the water, beautiful sixplexes. Looking to raise capital there too, because what I like about there is they're going to roll out 26 of them.
20,
26
26
or
six
20, sorry,
units.
23 sixplexes
Okay.
phased out over every couple months. And once I'm familiar with the area, the project, the rents,
Hmm.
the layout of the building, the developer, it's exciting to keep buying with the same
Yeah.
developer. I've had that same success when I started in Griffintown, always bought in the same developer, same building, just because they knew me, I knew them. When I needed something, I was first on the call. I was always the VIP client. And that's how I
Hmm.
also one of my, you know, fortes, how I do business. I like to keep going back to the same one as opposed to scattering around everywhere. And, when you have a privileged, key, strong relationship, it really pans out well.
Hmm. I find it's interesting your deal in Lac Mégantic there. I'd love to hear a little bit more about it. So at this point, is it just vacant land? Like, how is the deal structured?
So
Where is it at?
they've already built up two sixplexes there that are rented and ready to be sold. And then they're going to be phasing out every 2 months. They're having one sixplex until they kind of deploy the whole lot. It's all identical. They're all identical. They all look the same. Revenues will be similar, of course, given it's the same size, same everything, with an anticipation to have the rents, increase throughout time, which is the interesting part of the project. It's
Hmm.
on the water, by the downtown core. I mean, there's no real
Beautiful.
downtown in Lac
No,
Mégantic,
no,
let's
no,
be
but
honest,
it's all
but
relative.
it's a good location, and the price per door is just about 250,000, which is quite reasonable for a new construction. So, including the land, of course. So,
Hmm. Okay. Okay. And so at this point, how are you involved in the deal? Are you buying the land and then the contractor is going to build it for you, or how is it structured?
great question. So, most people, what they do is they'll buy the land, get the financing on the land, then find a developer, build the project. It's a lot more time consuming and sometimes complicated to structure a deal like that. I don't do it like that. I like the turnkey method. Basically, the developer sells me three things. The developer sells me three things. They're selling me in the transaction the land, the building fully built, ready to move in, and already rented with the tenants.
Hmm.
So I go to the notary and I have all three done for me.
Yeah, you're buying the revenue.
I'm buying the revenue, I'm buying the building, I'm buying the land all in one. I don't have to
Nice.
worry about hiring someone to find the tenants, which
Hmm.
is costly. It's about $500 a door. I get that all embedded, priced in for me. The
Hmm.
land is already there. Everything is already
Yeah,
there.
yeah, I know. You're at that point, you're just buying a fully developed, stabilized turnkey assets. And so I could see from your financial background how that absolutely makes sense because you don't want to be involved into the asset management part of it. And I take it that you have a local management company who's going to be there taking the calls and doing all the gritty work.
Correct. So I'm buying three things: the land, the building, and the revenue. given the tenants are already in place, which for
Mhm.
me is it's if I do that and I'm buying three things, it's saving me I'm saving time, I'm saving money, and I'm saving headaches. So
Mhm. Yeah. And given the fact that that land is being developed in phases, are you buying the all of the land? Like when you're going to the notary and you're paying for it, and I think this could really benefit the audience in understanding how a deal like that is structured. Like you're not going to be buying, are you buying all of the land and then the future value of all the buildings and you pay for it now? Or
the
how
goal
does
is
that
going to
work?
be so the goal is going to be to buy them in two at a time and finance them as 12s, just because it makes a little bit more sense. I'll have access to better rates.
Yeah.
Most investors, a sixplex is a bit small. So how I see it and how I envision this project in raising capital will be to phase them out into 12s. So one 12, two sixes closed at the notary together, one financing, one transaction, two
Yeah.
different cadasters. And then that'll be based on investor appetite. So as investors come in and say, here's 200 grand for it, it'll just kind of go out and outlays. If I can buy it all, we'll do it all. If I can do a portion, I'll do a portion. And if it's just 24 doors, we'll do just 24 doors. I don't have, any pressure to buy a certain amount. It's based on, investor appetite and investor interest.
Nice. And so at this point, with which frequency are you hoping to close? Like is it twice a year, three times a year? Like what's
It'll
the
be
objective?
probably, it'll be two sixplexes, so 12 doors every 4 months, every season approximately.
Yeah. Nice. That's exciting. Okay. And then you also mentioned Granby. What are you looking at over there?
So it's a little still premature. I'm on kind of a VIP list there. There's another project of 150 doors, also very well priced, at about 260 a door for new construction. They'll be likely in groups of 12 to 18 doors, kind of
Mhm.
parceled together, which is just the best mix for financing, the best price point.
Yeah. Optimal.
Around 20 doors, 15, 20 doors is really the sweet spot. I've always liked that kind of configuration of how the developer puts together the different, doors. Love it. That's a little bit premature. Maybe we can talk about it at the next time. I wanted to also talk about Get Snow, which is my core market. We took a little
Yeah.
tangent to go to Mégantic. Great project, cheap, gonna do well. I have some very, very interesting projects in Get Snow, which I wanted to share with you, the
Please.
audience, and your investors, because I have two projects I want to raise capital for. I have 232 doors.
Okay.
These have underground parking. They have elevators. They're luxury apartments, uh, quartz countertops, rain shower, high foot ceilings, mezzanines. This is the whole luxury type multifamily. So I have 232 doors that I'm raising capital for actually. Just got the green light. The price is actually very good. They've slightly lowered their price because they were able to secure their materials lower than they anticipated. So it's going to be less
That's good
expensive
news.
than anticipated. Super excited. I got the call yesterday for that. Those are priced at 12 million each with tax. So it comes to 380 per door, 385 per door. Originally, they were going to be above 400. Now they've dipped down below, which is, although it sounds expensive, that's where we're at, Axel, in terms of the construction.
Yeah, well,
The
especially for
cost
the
of,
higher end market like that. I mean, I'm not surprised it's 360, 380. I mean, it makes
with
sense.
an underground parking, an
Yeah.
elevator, courts, we're talking luxury multifamily. So the good news about these two is I'm going to qualify with the new program between 5 to 10% down payment. So what does that mean for an investor? It means that traditional financing, we're seeing investors put between 25 to 30% down right now. If I can close the deal with 10% of equity, we're looking at a rate of return of 3 times higher, given the return on equity is, there. So if I'm going to buy 12 million and I need 1.2 million down on that deal
Wow.
versus needing 30%, which is 3.6 million, when the investor gets paid back through a refi or a sale or the distributions monthly, your return on equity is 3 times greater.
Mhm.
So that's the beauty of the new program. It's difficult to find buildings that will qualify with 5 to 10% down, but I'm the guy to do that.
And you're the guy to do that. And so going into a little bit in the details here and how you use this program, there's kind of three levers to really maximize the points on the affordability, the energy efficiency, and the accessibility. Are you trying to hit all three categories, or do you focus more on one or the other?
The answer is yes and no, because obviously if you can score points with accessibility and the energy efficiency portion, you don't have to sacrifice on the rents, which, means more cash flow to the investor. However, those two criteria with the new CMHC program are the hardest to achieve points.
Yeah.
So although they give the best return, they're the hardest to score points. We're looking at the energy efficient. The accessibility is very challenging. I don't think I'll be able to score that for these because you need to have handicap ramps. You need to have wider hallways, which just reduces the cost of square footage, which means less rent. So you don't always come out winning. The way I see these 232 unit multifamily luxury and Gatineau will be really scoring it through the affordability. So basically what that means is that 25% of my units have to be rented at $1,220 per door.
At 1220. Okay, that's
1,220. And I mean, normally we'd be getting about 1,400 for some smaller units. So we're leaving money on the table in terms of what we're getting in rent roll, but we're getting, different criteria to qualify at potentially a 95% loan to value. So it's really
the overall on the project makes it absolutely worth it to sacrifice that revenue. And this is what the CMHC was looking for in starting that program. So we also have to play ball. Like, let's not forget for everyone that the goal of the CMHC is to increase the housing accessibility for Canadians. So it does make sense. Exactly.
Correct.
Exactly.
So they're helping investors and developers and renters make housing affordable in Canada by putting in programs where rents are below market value at the 30% of the median income. They're increasing handicap accessibility as well as LED or energy efficient projects. They've put in these different measures to kind of make it possible. And if investors are able to identify the right projects, which I'm trying to do, well, you're getting handsome returns on investment as well.
Yeah, no, for sure. Okay, so man, you have a big full plate right now between Gatineau, like Mégantic and Granby.
Yeah.
Is there any other project or anything else that you're working on?
I'm tapped out with that. I've had success. I've secured one of the 32s in Gatineau that I just discussed. There's two more that I'd like to secure. That's kind of what's hot right now, and I think the best possible deal. So whoever is, open to that, we're looking at, potentially qualifying with 650 of down payment to buy 12 million in real estate. It's
pretty good. I was going to say, when you've secured, is that basically you've paid a deposit?
One of them is reserved, correct? Yeah. The deposit's there. It's mine. There's no going back. There's two more that are in the works that I kind of have as a VIP list. And I see these, we're getting them at 12.5, 12.3. By the time they'll be delivered next summer, I can see them, well above 14. So
I was going to say 14.5.
We're looking at making already about 1.5 million just throughout like the embryonic phase of construction, which makes sense, right? We're looking at about a 10-12% uptick in that, just because there's no revenue right now. It's just in the building process. But think about it. If you're putting a down payment of, let's say, 650, and you're going to be making 2 million of up, you're like tripling your money in about a year and a half. And then once you take possession of that building, while it keeps increasing in value as rents go up, you're getting that cash flow. So I'm looking for some lucky investors. I got that on the table.
I want in on those deals, man. I think they're really good.
Maybe talk on the side. Yeah, I'll reserve us one. How does that sound?
That sounds like a good idea. And the thing too, and I remember already the first time when we spoke about all this, I really like your model and how you've been able to get involved into real estate, invest, because you're really looking at this just as a pure financial investment, and you're not at all involved into the asset management part, which is the most time consuming. And I really applaud you for it because I didn't take that route. I've still been involved in the asset management. And sometimes it's not that I don't regret anything, but it's just that it is very time consuming and you have to be very well organized. And so I applaud you in a way for putting in place that structure that allows you to solely look at this as a financial tool.
No, thank you, Axel. I mean, my time is kind of invested elsewhere, right? I have to spend a lot of time getting the relationships with the developers, understanding the numbers, understanding the program. There's a lot of caveats with the new program with the CMHC. There's still questions we have unanswered. And, you know, as the program unfolds, we'll get more clarity into certain aspects. So there's a lot of behind the scenes work. It sounds like I buy things turnkey, very easy peasy, which is in turn true, but there's always, you know, a lot of back and forth happening and understanding what qualifies, and finding deals that qualify with 5% down is the hardest challenge right now. And that's where I commit my time.
Yeah, for sure. For sure. And that new program is a great tool. Like I heard there's a flood of application, obviously, when it started. And it's only been 2 months that they've been processing those applications. So there's still some kinks to be ironed out. And I hope there won't be any surprises, and that everything is going to go the way it should. But who knows?
I think for the next year or two, they'll keep the program as is because we are in a shortage of housing. There is a housing crisis in Canada. I mean, we're all aware of that, and immigration remains strong over the next couple of years. We're seeing a few more 100,000, immigrants come into Canada between now and 2024. They're going to have to work with us as investors and developers to keep these programs, appealing, and, nothing to say they can't change it and abolish it in the future or make it more challenging or change any of the rules, right? A government can change any program at any time. But once you commit and I buy now and I'm approved now and I lock in, 5 years now, they can't undo a mortgage that's locked in. So no, I say let's get as many files approved and funded now before the rules change.
Oh, for sure. Let's pile into it.
Yeah, exactly. Yeah. Let's take advantage. Let's do what we got to do now that, the sky is blue.
Yeah. And the thing is that it perfectly makes sense. Like this program came at a good time. And again, like there's a housing shortage. This will help finance new developments and add new dwellings on the market. So
absolutely,
it really will serve its purpose. Now, as we're wrapping up here, how can we help you? Is there anything on our side that we could do?
Always looking, to help other investors kind of get into the pre-construction real estate. I know many people are intimidated. They don't know how to go about building, finding land, what area, how to get it rented, how to get it financed. I'm the guy for that. So how we can work together, get involved. Right now, as I mentioned, I have deals on the table. I'm looking to fund and partner with investors. I'll take care of doing all the work from A to Z. That's my forte. Follow me on Instagram, Alex Rossi 6. So that's ALEXROSSI 6 on Instagram. You can connect with me on LinkedIn for my, professional background. And you can DM me to get the conversation going about upcoming deals I got and how we can work together. And of course, I'm always looking to, inspire and make people healthier, happier, and wealthier. I have my podcast on Instagram, Psych Wednesday, every week. You get a little, how could I say it, cheeky, fun, tip of the week kind of thing. So.
It is fun. It is fun. Go and follow Alex. He delivers great content. So thank you very much, man. Always fun to talk to you. Thank you for all those updates. It is every time we talk about your deals, I'm like, man, I should do it more this way. It's such a good idea. So I hope it'll inspire others to go in that direction and to reach out if they want to get involved for, hey, who knows, a 12-plex in Lac-Mégantic.
Absolutely. Well, thank you for having me. It was, a pleasure being back on the show, and looking forward to chatting again soon.
Sounds good. Thank you so much, Alex. Now you have a wonderful day. Ciao.
You as well.
Thank you everyone for listening. Stay tuned. And until next week, go do some market research and go make some offers.
Thank you. Call me.
And call Alex. Oh man, you're on fire. All right, everyone. Ciao, ciao.